These three things will make you a more profitable scalper overnight. Do you want to be a better scalper? Scalping is such a powerful method of trading because it allows you to come to the charts at any time of day and look for a setup that you can profit on, even on a very low time frame. Great for people who work a day job or are very busy during certain parts of the day, but maybe 2, 3, 4 times a week, they have a few hours they can set aside for trading. Unfortunately, most people approach scalping in the wrong way, and what can actually be a very profitable way of trading can turn into death by 1,000 cuts. Because if you don't have everything on point, scalping can easily lose you lots of money in a very short period of time. So these are the three things that I believe everybody needs to have on point if they want to be a profitable scalper. The first thing you must do if you want to be a profitable scalper is have a plan, an entry, a stop loss, and a take profit already prepared in advance before you even think about entering into a trade. Now, a lot of people, when they think about scalping and they're thinking about capitalizing on small moves, they actually throw all the planning out the window. They think, hey, if we're going to get a big pump, I'll quickly just hop into this long, take profit real quick, and then close the trade in a profit. However, this can quickly lead to massive losses. Because if you are just entering into a trade willy-nilly without a clearly defined entry, take profit, and stop loss, you are not trading, you are gambling. Why is this? Because every single trade you enter needs to have a calculated risk and a calculated reward. This is so that you can keep your losses very small and your wins very big. I want to take a look at this trade I entered today, along on the S&P 500. You can see I took a long from a very specific level, the Fibonacci golden pocket retracement, my stop loss just below the 786 Fibonacci retracement. Now, when I entered this scalp trade, you can see I had a very clearly defined stop loss, a 0.05% move against me. I also had a very clearly defined take profit 1 at 44.61. What this means is that after a move of only 0.38%, when I hit my take profit 1 and I close half the trade, this is actually right now a 3.5 to 1 risk reward ratio. What does that mean? It means even if I close half of the trade at my take profit 1 and keep the second half open, I've already made 3.5 times more profit than I actually risked on the trade. Okay, this is super, super important. If you enter a trade without having these things clearly planned out in advance, you might hold it for a loss that's much, much bigger than you anticipate. Okay, and what this can do is it can actually make your losses very big, and then it can lead to a cascade of bad trading behaviors like revenge trading and entering into more trades without a clearly defined plan. So how do you come up with a plan? You need to have a very, very specific level planned out in advance where you are looking for the trade. Okay, take a look at the scalp. All right, I want to show you the precision that I used when looking for an entry here. All right, we came down to a level, the Fibonacci golden pocket retracement, and I was basically looking for a trade within this zone right here. Okay, within this purple box right here. What does that mean? That means if we start to close candles below my purple box, I need to get out of the trade because it means my idea to take a scalp from this area is wrong. The first thing when it comes to scalping that's very, very important is you need to be looking for a very precise level to take a trade from. Not a big area, not a big zone, but a very, very precise level. For example, the long trade that I'm currently in right now on the S&P 500 is long from the Fibonacci golden pocket retracement. So basically, when we actually put in that low, and then we came to put in our first high right here, I pulled the Fibonacci golden pocket from this area and it landed right in this zone. What does that mean? That means if we come down to the zone and I see the bounce and we don't close the candle below the purple box I have right here, I enter the trade. Why is it so important to have a very precise level for any trade you take? The reason is because when we are scalping, the goal is to keep the risk very, very small, but the reward very, very big. Now, this is the 15-minute time frame. We could go down to the 1-minute time frame on this chart and see that really we're just trading a sideways range on the 1-minute time frame. So if we're looking for a long trade from a golden pocket retracement, and we know that if we close a candle below the 786, we need to get out of the trade. This gives us a 0.05% stop loss, right? Because we're longing such a precise level, if we are wrong, we are only losing 0.05% on that trade. Now, notice something else. My take profit 1 is right here at the top of the range, which means if I hit my take profit 1, that's a 7-to-1 risk reward ratio. My trade setup is planned in a way so that even with a very small move, I'm potentially making 7 times more profit than I'm risking on the trade on my take profit 1. Now for me, I like to take half the position out when we come to take profit 1, which still gives me a 3-to-1 risk reward ratio, meaning if I take half the trade out at my take profit 1, I'm still booking in my account realized profit 3.5 times more reward than I risked on the trade. What does this mean? This means if you take 3 trades in a row and you lose 3, but then that 4th one is a win, right? You are still going to be at break even. You're setting yourself up for success. One of the biggest mistakes scalpers make, or people who are getting into scalping, is they don't have these things planned out in advance and they end up chasing price. And if you are chasing price as a scalper, that is a recipe to get absolutely wrecked. Because when you are dealing with small time frames, you are not going to have the discipline, you are not even going to have the ability to think clearly about whether or not you should close the trade or keep it open, unless you already know going into it, I will close the trade here. You've already got it planned out. And you know I will take profit here because you already have it planned out. How many times have I and many of you, when we first started trading, especially on lower time frames, got into a trade, held it into profit, didn't take profit because we had no plan, held it into a loss, didn't close the trade because we wanted it to go back up, and then eventually we either got liquidated or we closed at a massive loss, right? Mitigate all that risk of flopping and groping mentally by planning this stuff out in advance. This is how I trade. This is how we trade in the Casper Crew VIP Discord. We gave the short setup on the S&P 500. Setup was given in advance with the clear plan, with the entry, with the stop loss, everything we were looking for. And of course, we got everything we wanted to see at that exact level. We knew when to enter. We knew where our stop loss would be. And it was a massive short trade. And it actually came down to the level that we're actually long from right now, which is this box right here, where once again, we had a very clearly defined plan at a very clearly defined level to get into the long trade. This is also how we literally took that long trade on Bitcoin from the exact bottom, because we had the literal exact level 24,925 and we knew what we wanted to see on the chart. So it's very important that you have everything planned out in advance, even for a very small move. If you want to join the Casper Crew VIP Discord, you can click the link at JaysonCasperTrading.com to join the community. Guys, it's a great community. We have a whole beginner section walking you through the basics you need to know coming into these markets to at least not get wrecked. We have multiple traders, professional traders, doing live streams multiple times a day, giving their setups, giving their levels, allowing you to get into their thought process. It's a great educational group. Also, if you want a more thorough step-by-step education, check out the courses we have right here. We are proud to announce White Phoenix's Smart Money Approach to Trading. This is the most comprehensive course I've ever seen when it comes to trading for all markets, and we are happy to release this. If you are new, if you're struggling, I highly recommend you check it out. Also, guys, if you want to trade these markets, I'm trading cryptocurrency on MEXC. It's the best exchange out there when it comes to fees. 0% maker order fees, 0.01% maker or taker order fees. When it comes to scalping, you will not get wrecked on fees on MEXC. To trade the S&P 500, to trade NASDAQ, I'm trading over on ByBit. ByBit allows you to trade traditional markets like the S&P 500, like NASDAQ, but using your tether as margin. So if you're into crypto like me, you don't want to have a traditional brokerage account, I highly recommend ByBit. Guys, please only sign up for an exchange if you know how to trade. If you don't know how to trade, please get educated first. Otherwise, you will lose absolutely everything. The second most important thing is using the right position size. This is where traders get absolutely wrecked by risking too much on a trade. Now, scalping actually allows you to put a lot of money on a trade and risk very little, but it's very important that you use the proper position size and calculate it in advance to keep your risk very low. Now, when it comes to scalping, I recommend risking 0.5 to 1% of your total stack per trade, okay? This does not mean you are putting 0.5 to 1% of your total stack on a trade. It means you are risking 0.5 to 1% of your total stack on a trade. Now, let me show you how to figure out your position size when it comes to scalping. Okay, so let's say we're going to long the daily open on Bitcoin at 26,523. And let's say that we know our invalidation point on this level is basically going to give us a point. Now, this is a pretty small stop loss. Let's say, yeah, a 0.15% stop. And our target is going to be let's say a 0.75% move, which is giving us a nice 5-to-1 risk reward ratio. Okay, what we do here, let's say we have $100. The way we calculate our position size is we take the amount of money that we want to risk and we divide it by our stop loss. So if we have $100 and we want to risk 0.5%, what we are going to do is take 0.5% of $100, which just so happens to be $5, and we are going to divide that by our stop loss, which is 0.15%. So that would be 0.0015, and that will equal the amount of dollars that we actually put onto the trade. So if we go ahead, and I'm going to use a calculator because whenever I try and do this on a whim during a video, I make some stupid math mistake. You know how it is, red light syndrome when you're recording. So we're going to divide 5 by 0.0015, and that actually equals $3,000 that we get to put on this trade. If we put $3,000 onto this trade and we get stopped out at a 0.15% stop, that means we have only lost $5 on the trade. And of course, this is where leverage comes in, but you have to understand leverage is simply just a tool to allow you to scalp with, let's say, $100 in your account, but put more money than you have on the trade. Because even if you're putting more money than you have on the trade, you're still only risking 0.5% per trade. That is what is most important. And so over time, if we're risking $5 per time we get stopped out, think about this. If we happen to get a 1% move, we just made 1% on $3,000, which is going to be $30, okay? You could very easily make a massive amount on your account in a few scalp trades because you're able to risk so little, and we're taking profits very early with very good risk to reward ratios. But again, you can see how powerful this can be for making money. You can also see how powerful this can be for losing money if we don't have step 1 down. So if you have step 1 down, now implement step 2 using the proper position size. And that leads us right to step 3, which is have the dang patience to wait for a setup and abide by step 1 and 2. All right. Most people lose money because they are not patient in these markets. They try and force trades. They try and chase price. And even if you're implementing step 1 by longing or shorting an exact level, and step 2 using the correct position size, if you are not waiting for a specific type of trade setup, you are setting yourself up for failure. The reason we look for setups, the reason we wait for specific confirmations on a chart, whatever your strategy is of trading, if we don't abide by that strategy, how can we expect to be profitable over time? And so really, scalping requires a large amount of discipline. It requires a big amount of patience, because although we can look for trades on small time frames, you might not get a trade in the 1 or 2 hours that you're at the charts. You just might not, and you have to be okay with that. You have to be okay with that, because at the end of the day, we are not here to scalp every little move. We are here to scalp the highest probability trade setups Doing so, abiding by rule 1, which is have a clearly defined entry, stop loss, and take profit, and abiding by rule 2, which is risking the right amount and using the right position size. If you combine steps 1 and steps 2 with any kind of trading strategy, and you actually have the patience and the discipline to abide by that strategy, you are setting yourself up for success. Now, if you want to learn specific trading strategies, I recommend you check out the courses. Also, guys, check out my YouTube channel because I have a playlist full of trading strategies. All right, guys, that is it for today's video. May God bless you all in the name of Jesus, Yeshua, the Messiah. Look, even if you're not religious, I still pray you and your family are super blessed. And I'll see everybody in the next video. Peace.